Ladies and gentlemen, what we have before us is what we call an investor's nightmare. You're putting a lot of money into a stock, and then for some reasons it begins to go down, and that's painful. And that's exactly what happened to Shopify. Okay, I'm going to be explaining a couple of things. That's not what exactly happened, although it's half of it, because Shopify is kind of been affected by the market. Generally there's been a downturn in the entire market, the entire stock market. So they were affected at first, but what they actually did was they did a stock split, which further reduced the price of their stock. And I'm going to be showing you and taking you through what the stock split is, and I'm going to be showing you how to take advantage. I just want you to know that it is not exactly financial advice, and I don't claim to be an expert in anything, to be honest. So please do your own research. All right, this I did a little write up just to explain the whole stock split ish, and I'm going to give like real life examples. You should just know that June is a very this July is actually a very nice time. July 2022 is a nice time to watch out for some few stock splits that are coming up. So what is a stock split? This stock split 101, that's the title. Let's say for example company A has a stock price of $1,000 per share, and the truth is that not everybody can throw in $1,000 into a stock, but then they have like an idea to do a 10-to-1 stock split. What a 10-to-1 stock split means is for every one share that exists, they will divide it into 10. So let's say I own just one, which is $1,000, which is one stock, and they do a 10-to-1 split. I would end up owning 10 shares. But what I will now own is each of the 10 will be $100, which will now still be the same $1,000 that I had, but this time I have it in 10 different parts, which is $100 each. So that makes it easier for other people to buy the stock. And Amazon did something like that. They were trading at $2,700. Was it 2,700 or 2,200? Something like that. So no one can roll out $2,200. Okay, there are people that can do that, but most folks can't. So they said to do a stock split, and their stock I think dropped to $125. So $125 is something that a lot of people can part away with. So that's why they do things like that. Now, there could be other instances of 2-to-1. It could be 20-to-1. Amazon did a 20-to-1. Shopify did a 10-to-1. Shopify was at I think $300 when they did the stock split. Was it $300 or $400? Please, you could help me verify this data. But around that, but they were trading at 1,600 at some point, and they went down because of the market. Even at 1,600, most people can't even afford the whole stock. So they did a stock split at around $300, something like that. Okay. Now I'm going to explain a reverse stock to you. A reverse stock in this case is if you have like many stocks, they'll combine them into one. Instead of splitting them, they make them one. They do that to increase the price of a stock. In the other part, in stock split, they reduce the price. In this one, they increase the price. So, for example, let's say I own 10 shares of a stock and it costs $1. That means I have $10 in total. So in this case, they do a reverse stock split of 1 to 10. So for every 10 that I own, they will make it 1. Every 10 that I own, they will make it 1. So in this case, since I own 10, I just have 1, and that 1 will be at the price of $10. So that's a reverse split. So you see the price has increased, and there are so many people that will not buy stocks that are below a certain price. So this also helps attract new investors. Totally legal, by the way. So that's just what happened to Shopify. And this July 2022, let me bring it back to this chart. This chart is actually posted up on my Twitter. I'm not reading the live chat here. It's a screenshot, and I posted it on Twitter. I really did say I was going to check out what happened and how to make money from it. So the best way to make money from a stock split, from what I just researched, is by trading the stock. Let's say you're shorting the stock. Say for example, you are a trader and you were to short a stock. You know that once it does a split, the price will reduce. You could do a price short, or once the price was to increase, once they were doing a reverse, the price was going to increase. Even though that is not always the case in a reverse split, you could do a price increase. You could do a long for it. Here is the thing: I have never done a short towards. I've never done a stock short towards a split. So I don't really know how it happens, but I'm still asking everyone that has been doing that specializes in doing stock trading, how if that's possible, because this July there are going to be a lot of Tesla is trying to do their split, but though they are debating it. But I think Alphabet, the guys that own Google, they are trying to do a split so that they could reduce the price of Alphabet. So that's just all for the video. Please don't forget to like and subscribe, and don't forget to share with your friends. My name is Raf. Until next time, on my next video, I'll be seeing you guys.